Thank you, Randy. Hey, everybody. How y'all doing? I see Reagan Tid sitting over there. Ed, your screen says Reagan on it, just so you know. But hey, in this new world, it's like, hey, it's all good. I was joking with somebody yesterday because I was on the phone with one of our claim adjusters, and there were kids screaming in the background. And she's obviously working from home. And I was joking around with her because I was like, a couple of months ago, we were all horrified by that idea. Now it's like every phone call, there's kids screaming in the background. We don't think twice about it. So, hey, look, I appreciate the opportunity. Just so you know, I have a screen on one side. I look over here because I can see you. I know my camera's over here. So, you're probably going to see me looking away and back and forth. I really appreciate the opportunity to talk with everybody for a few minutes. But basically what I'm going to do today, I'm not going to make this an advertisement about me. What I'm going to try to do is I'm going to try to make it about you, the audience, based on things that we here in my office are experiencing. And then out of that, there's a thing or two maybe I'll share because this is a good moment with what's happening in the insurance industry. And of course, all of you have insurance. So I'll give you a little bit of advice. I'm gonna try to kind of wrap that and keep it relatively short. And if you want to ask me any questions, I'll tell you what I know. If I don't know, I'll tell you I don't know, but I might be able to help you find the answer. So Randy mentioned I'll tell you a little bit about me. So I'm 54 years old. I started with State Farm 32 years ago. I've been with State Farm my entire working career. I've stayed with them this long. I'm never going to leave them. State Farm is just an amazing company. I did not grow up in Mount Airy. I moved here voluntarily. Travis, I'm going to put this in here. I moved here on purpose because I'm going to tell you what, this area right here has a huge amount of opportunity in the future. I know that. I came here for that reason. And I'm just a really big believer in our community and what the future holds, regardless of what's going on at the moment. In my career, I've lived in 6 different places. I've moved with State Farm. I've been a State Farm agent twice. Originally, I was in Kannapolis, North Carolina, which is outside of Charlotte, if you don't know. And I had a leadership path with State Farm until that was being reorganized. And when I came to Mount Airy 7 years ago, took over for a very fine gentleman who was in this office for 25 years named Steve Gross. One of the most gracious men I've ever met at State Farm. Miss him to death. So what I'll always tell people, and I'm going to kind of wrap all this together this way, is that in my career, I've done basically 2 things. I've either been an agency, which is where and all of you, I'm sure, have an insurance agent, or if you don't, you have an insurance company. The agent's job is to help people get their coverage straight with the anticipation that something is going to happen. Now, I think everybody kind of operates on a daily basis with the mindset that, nothing really bad is going to happen. But, take the power poles yesterday. I've got a customer with 2 automobiles that we had claims on yesterday from those power poles. And so, you never know what's going to happen. Prior to being an agency, and this is the way I was trained, and this is the way I was brought up at State Farm, I was in claims. I was a claim adjuster, and then I was a manager. I was not trained as a salesperson. I was trained as a claims person. And so I'm very coverage focused. I will tell you to the day is long that, when you're paying your insurance bill and everything is good, the focus is, well, how cheap can I get my insurance to be? But when the power poles come down on that street on top of your vehicles, the first question is not what was my premium. The question is, well, what coverage do I have? Am I covered for this? Because now I need my insurance. And so you got to keep those 2 things always in mind. Price, but coverage and service are, in my opinion, more important. So my office is located, it's been a State Farm office for many, many years. I'm located on North South Street. I'm in a separate building directly next to where Gates Pharmacy is. It's been here for, gosh, I don't know, at least 20 years, maybe 25 years. And most people in town, kind of know where we are. I watched some of the videos from the other mixers, and a lot of other people, it seemed, talk about like how COVID has affected their business. And so we're at a moment in time in the insurance business. The insurance business is considered to be an essential business by Homeland Security. So people still have to have their insurance. It has been a big adjustment in the insurance industry. I'm going to talk about that first. I'm going to relate that back to you because different insurance companies are all basically in the same situation. And so we have had hundreds, I have had hundreds of my customers calling our office, asking us questions about this topic. And that is basically, how does the COVID virus and what's happened over the past number of months impact insurance? You know, how does that really impact you? And so if you watch TV, well, for years and years, it's like you can't turn on a television without there being an insurance advertisement to buy insurance. Insurance is extremely competitive over the last, well, over my career of 32 years. You know, it's really focused on price, price, price. Everybody can save you $400. In theory, everybody can't save you $400. That's not possible. Some people don't even pay $400. So it's very competitive. But when this COVID thing hit, you're seeing commercials now from varying insurance companies that are talking about things like policyholder relief funds, the good neighbor discount. I don't know what all the competitors' language are, but you're seeing all this stuff, and it is causing a tremendous number of questions. So what I want to do is just give you the skinny on what that's all about. Okay, so this relates, all these commercials that you're seeing relates to car insurance. So prior to COVID, a normal question in our office would be, why is my premium X, whatever it is? Why do I pay what I pay? How does an insurance company come up with that? And it's not a simple answer, but I'm going to boil it down to the simplest common denominator. An insurance company that's providing car insurance sets their rates based on two things. One is, how much money does it cost to run the company? That's their expense ratio. And then a majority, about 70% of the rate setting, is based on claims. That's what we do with the premium money, is we pay claims. So claims, if you think about car insurance and car insurance accidents that are happening, and you see them and you hear about them, you see news, you know, yesterday the power poles hit some cars. Car insurance accidents, and you know what insurance companies do when they set rates is they set those rates looking forward. They don't look backward, they look forward. And it breaks down into to the basic denominator of, when a car is damaged, what's the average repair cost on a car? And you know, with newer cars, with cameras in the bumpers and fancier trim and all this technology, you know, it's a simple evolution that over time, the cost to repair a car is going to go up. The labor rate in a body shop is going to go up. But the second component, and this is where COVID comes into play, is what insurance companies call the frequency of car insurance accidents. How many car accidents are happening? And, you know, in January, the economy is booming. People are working. Gas is cheap. People are spending money. The number of cars that are on the road it was busy. That's a good word, busy. When COVID hit, the traffic went away. I would assume you all have seen that. The traffic went away. Like you drive around going, gosh, there's just nobody driving around. It's almost like a ghost town in some places. So nationally, what happened with insurance companies is accidents almost stopped. I mean, they didn't completely go away, but they had set their rates anticipating a certain number of accidents. And now all of a sudden there's this behavior change in the United States that makes it so car accidents just aren't happening near as much as what they were. And so when that started, which was really in March, the very first thing you saw from multiple insurance companies is you saw them talk about We called it the Policyholder Relief Fund. Different competitors have different names for it, but insurance companies ended up with all this premium that they're charging on their premium, and they didn't have claims to pay. So everything started in the short run with, we need to refund some money. And different insurance companies have done that in different ways. The way that ours is technically considered to be a dividend. We are a mutual company, not a publicly traded company. So we're owned by our policyholders, and so technically it's a dividend. We're just returning premium to the customer. Depending on how the customer pays, we've done that in the form of credits. There are a few situations where we sent people checks, but those were people that canceled their insurance in the middle of the COVID, and we gave them money back anyway. And that's simply because the rates temporarily were too high. So a lot of the commercials, the insurance companies are using this as a marketing thing, but it's really a simple just matter of math. That's the short run. So then in the long run, and this is something that none of us really know the answer to, in the long run, now it gets into what happens next. How soon will it be before the people's behavior driving their cars around returns to normal? It's probably not going to happen one day. It's probably going to migrate. How long will that last? When will it ever return to exactly what it was before? So now what's happening is the insurance companies are trying to decide how to deal with this going forward. We had set rate structures before based on the way things were. We went through this temporary period of time where there's credits given back. And so now what you're starting to see insurance companies next do one of two things. One is to give you a one-time credit, which is where they're like, hey, for the next 6 months, we're going to give you X% back. State Farm, and State Farm is a household name. State Farm is the #1 insurance company for car insurance in the United States. And we have been every single year since 1942. Think about that. For almost 60 years in a row, we've had the #1 position. And so State Farm, in my mind, of course I represent them, is just extremely good with this. And so what's happening on the State Farm side is that State Farm, over the next 6 months, it actually starts on August the 17th, and for the next 6 months, as people's policies renew, is we are actually not giving credits. We are actually going to be changing our premiums. We're reducing our premiums. So our average premium decrease starting August the 17th is a 10% decrease. Between the credits and the premium decrease, this will kind of give you the scale of it. State Farm is basically either returning or not going to be charging in excess of $4 billion in automobile premium as a result of COVID. And so if you're, wherever you're insured, if you listen to this, I will tell you that varying companies have different approaches to this.